Good afternoon, students. Welcome back to this discussion on audit. So we'll just continue with our discussion on the audit of this banks. Okay, so far I think a couple of broad areas we have covered. First of all, we discussed about the understanding of the environment. Okay, wherein we talked about as to what all things you will be looking into. Correct. So it was all about being of business, environment. Okay, a lot of rules and regulations to which the bank is subject to. Yeah, so some of these aspects we discussed are quite critical. Why? Because when it comes to the audit procedures or when it comes to the audit, so of course all of these things you'll need, because without that it will be difficult for you to get into the planning of the audit. Correct. Next was about the audit approach. Okay, and in case of an audit approach, I think we spent some time in the last session wherein we tried to understand that when it comes to the audit of any entity, okay, so the largely approach will remain same. The approach should not change. The only thing which could change maybe the features or the peculiar points which will be applicable to that entity. Okay, and primarily in that case, rules, or you can say the laws and regulations which will be applicable, those are going to be looked at. Okay, so that's going to be one area which becomes important. The other area could be in respect of accounting requirements, if at all those are specific to the entity, but those are not going to be significantly different. Okay, in most of the cases. Yeah. Third was about the requirements related to auditing standards. Therein we discussed that when it comes to the auditing standards, so the principles of audit, they are going to remain the same. Yeah. So considering all of these things, okay, we need to always plan our audit. And we discussed that when it comes to the planning of audit of a bank, so there are a lot of planning related points. For example, understanding the bank, getting into the engagement formalities while accepting the audit of the bank, then getting into the planning procedures, for example, materiality, for example, risk assessment, for example, understanding of the control environment, okay, designing the audit procedures. All of these things were not really new, correct? But we also understood that this is something which you are going to apply on each and every entity. So the banking is also an entity, so that's why this will also come over here. Yeah. So idea was to just give you a perspective that whether it's a banking entity or any other entity, similar thought process you'll have to consider. Okay. Now what we are going to do is, so now we will pick up certain items of the financial statements. And for a bank, as we discussed in our previous session also, the most important item in the financial statements happens to be the advances. Correct? Yeah. So for a bank, it is going to be the most important item, most critical. And there are reasons for that we discussed. The reasons are very simple, that it's something which you can link the nature of the business of the bank. Okay. Why? Because when it comes to the nature of the business of the bank, what is that? To accept the deposits, right? Or you can say to receive money from some parties and then to lend money to the other parties. Okay. When the bank will receive money, it will pay interest. Let's suppose that is X. But when the bank will give money to the other parties, it will charge X plus 1 interest. So that's how the banks make money. Correct. So therefore, the key item in their financial statement should be what? This thing only. Correct? Yeah. Right. So now share this financial statements once again with you, though we looked at some of the financial statements earlier also. Okay, so one of the financial statements for this bank, let's look at. Yeah. So in case of this financial statement, okay, I'll just flip through the audit report. We'll also look into the audit report maybe later on once we are through with some of these areas. Okay, so if you look at this balance sheet, okay, for a bank, so this is year ended 31st March 24. So now what we are going to do is we are going to look at the asset side. Okay. In relation to the assets, we also understood that when it comes to a bank, so unlike which you see in case of any other company, wherein you have the segregation of current and non-current, and wherein the order or the line items in relation to assets, it's different structure, it's different ordering criteria which you see in case of bank, and that was about the order of liquidity. Correct. Now for a bank, if you also look at this particular bank in the asset side as well as the liability side, can you just mark a couple of items which are the major component of the assets or the liabilities? Over to you quickly. Yes, quickly. Can you just mark those items which are the major items appearing over here? Quickly. Which are the major items that you can see over here? Over to you quickly. Shreya says deposits and advances. What about others? Yes, tell me quickly. So if you look at this balance sheet, which areas in the balance sheet under liabilities appear to be the major one? Tanu says again, it's advances. Yes or no? Yeah. So if you look at the numbers, these numbers are reported in thousands. Okay. So now out of the total asset, what do you have? What do you have? Advances form the significant chunk. Significant chunk there in the form of advances. Yes or no? Yeah. In fact, it's a very, very significant number. If you take all other assets in a combined manner, advances would still exceed those assets. Yes or no? Similarly, if you go to the liabilities side, if you go to the liabilities side, deposits. What are these deposits? The money which the bank will receive from various customers, be it savings account, current account, fixed deposits. All of these are deposits. Okay. So there again, the major chunk is towards what? Deposits. Correct? Yeah. So that's what you can see. Okay. Now, let us just also move to the advances. Okay. So if we have to go to advances, yeah, considering the financial statements that we are looking at. We need to move into note number 9. Yeah, so in note number 9, we'll get to see a detailed breakup of these advances. Plus, we'll also have to look at the accounting policy. Okay, so both the things, let's try to understand. So first of all, I'll move to note number 9. Okay, idea is just to make you understand as to how the advances will be appearing. Because if we have to look at the audit of a particular item, then it can always be performed when you have the clarity. If you do not have the clarity, how will you perform the audit? Yes or no? Right? Okay, so now in case of advances, what do you have? Bills purchased and discounted, cash credit, overdraft, loans repayable on demand. Now, some of these terms, for example, term loans, this may appear to you as if it's a liability. Yes or no? Yeah. So generally, what do you think? It's a liability, correct? Because in the normal course, the financial statements that we look at, okay, various items that we cover, in all of those cases, you have all of these items appearing as liabilities in respect of any other company. Yes or no? Yeah. So for any other company, what will you have? You will have these items appearing as borrowings. But For a bank, it will be other way around. For a bank, it will be other way around. Correct? For a bank, it's the other company which has taken the loan. So that's why for the bank, what will it become? Asset. Yeah. So generally, at times when you look at these items, okay, so there could be a confusion whether it's a loan, that means whether it's a liability or an asset. Correct? Okay, so now if you look at the advances, there are various ways of presenting these advances in the financial statements. Yeah. Now, if you look at the first way, or you can look at the breakup. Okay, so in this breakup, what do you have? Advances are shown by their nature. Yes or no? Yeah. Or you can say in part A. Okay, so this part A is all about total advances, wherein their nature is given. So their segregation is on the basis of nature. If you go to this point B, in point B, again, you have the same amount of advances. So you may be thinking, but sir, is this not a duplication? No, that's the requirement to present these advances in the financial statements. So now the banks are required to classify these advances into whether they are secured by the tangible assets, whether they are covered by bank or government guarantees, or if they are unsecured. Okay, clear? Then, if you go down, if you look at point C, here again, in point C, you are given a breakup of the total advances. But in this case, the categorization is again different. Why? Because now the advances are required to be split on the basis of geographies. Means whether those are given in India or outside India. That's one. If those are given in India, whether those are given to priority sector, public sector, banks, means the other bank or any other entity. Correct? Yeah. Now, why are all of these items important and why are we discussing all of these items? Because you may be thinking, but sir, we need to get on to the audit. So why are we looking at some of these classification criteria? See, this is again important. Can you help me understand? Can anybody explain that why this understanding of the categorization of advances as to how they are appearing in the financial statements, what all disclosure requirements are attached to that? How could this be relevant to the auditor? Over to you. Any thoughts? Any thoughts from your side? Do you think it's going to be relevant? If yes, why? If no, why? Over to you quickly. Quickly. Do you think it's relevant at all? Yes or no? Yes, quickly. Quickly. Tell me fast. Do you think this reading of breakup required? Tanu says yes, it's relevant. But can you tell me, Tanu, that if you are saying it's relevant, so how is this relevant? Why is this relevant? Priyanshi says yes, to find out major debtors and creditors. Okay. Shreya says this will allow the auditor to understand where is the allocation of money. Julie says in different areas, a different rate of interest might be there. Okay, very good. So now, please understand that if let's suppose auditor has to audit the advances, so what will he do? He will pick up some samples, perform the checking of those samples. Correct? Yes or no? That's what he'll do. Now, if the auditor will not understand that These advances could be of different types. Okay. Then the total population of the auditor will be what? This. If let's suppose auditor doesn't get into this categorization, then for him, what will be the total population? This amount. Okay, 11 billion. Right? Yeah. So that will be the total population. And the sample he will select will be amongst this population. Right? That's how he'll select the sample. But in such a case, it may happen that the samples which get selected may not have any sample from this first category. Possible or not? Possible or not? When he is selecting amongst the total population, there is a possibility. Correct? Now, as against this approach, let's suppose if the auditor has a thought that this is the total population, but in this total population, he needs to ensure that one sample or some samples out of each category are selected. Then what will he do? Then he'll not look at one population of 11 billion. He'll consider there are three populations. And for three populations, he'll apply the sample selection criteria. Thereby, he will ensure that samples from all the populations are picked up. Yes or no? So, in case of these two approaches, okay, the first one or the second one, which one do you think will be more appropriate? Tell me quickly, which one you think will be more appropriate? Over to you, quickly. If let's suppose you are the auditor, which one will you consider to be more appropriate? Tanu says third one, means the second one. Shreya says second one. And can you tell me why the second one will be more appropriate? So what is changing? What is different? Or what is there in the second approach which makes you say this? So why is the second one more appropriate? Tell me quickly. Shreya says there will be more accuracy, but we are not looking at the workings. See, if you get into this second approach, then in a way, the samples which are selected, they will be better representation of the entire population. Yeah, their coverage is going to be higher. Yes or no? As against the first approach, wherein the coverage is definitely going to be lower. Correct? Yeah. So that's how it will happen. Correct or not? Yeah. Okay, now moving further. Now, this was the categorization. Okay, so we discussed that advances are categorized on the basis of their nature, on the basis of securities, whether those are secured or unsecured, then on the basis of geographies as well, to sectors to which the monies are given, right? Then further, what do you see in the financial statements? Okay, so in relation to advances, do you have anything? No. Then for these advances, accounting policies should also be looked at, yeah, to get some more clarity. Yes or no? So that's what the auditor should try to do. Yeah. So let's try to look at the accounting policy which would be there in relation to the advances. Okay. So the second point is about investments. Then you have these loans and other credit facilities. Yeah. So then if you look at the policy, it says bank classifies loans and investments into performing and non-performing in accordance with RBI guidelines, right? NPAs are classified into substandard, doubtful, loss assets based on the criteria of RBI. Interest on non-performing advances is transferred to an interest suspense account and not recognized. Remember, we discussed this that if there are non-performing advances, interest will not be recognized on accrual basis. It will be recognized on cash basis. Remember that? Yeah. So I think same is the policy over here. So that's about the classification. Okay. So then they are also explaining a lot of points in relation to the advances. So I'm not just trying to get into each and every point. Then the policy also explains provisioning criteria. So it says in case of corporate loans, advances, provisions are made for substandard, doubtful assets. Okay. Yeah. So this is all about the provision for the advances. Okay. So this entire explanation that you have. And all of these provisions, please remember, will have to be done by the bank on the basis of norms. Okay. So the prescribed guidelines which are there by the RBI. So that's what the bank will have to follow. Yes or no? Correct? Yeah. So I think if you go through this policy, then what will happen? You get some more clarity. Okay, you get some more clarity in relation to the advances. So as regards the advances, so if you just flip down, okay, so I'm just flipping the policy. So if you just flip down, do you have anything else which is important to be considered? Appears to be no. Okay, there of course, if you look at this next note, so some of the ratios have been captured, but ratios are again what? They are again the mandatory requirements which the banks are required to follow. Has got nothing to do really with our area in terms of audit of advances. Of course, these numbers would be used for the purposes of calculating all of these ratios, but not so relevant. Correct? Yeah, not so relevant. So what we will do is we'll just go back to the advances. Okay. So now if you go back to advances, yeah, so this is the one. Now in this case, if you look at the amount which is shown in the balance sheet, correct? So this is the balance sheet. Yeah. So all of these amounts are shown net of provisions. Can you see this? Yes or no? Yeah. So if let's suppose these advances are net of provision, so what does it mean? That in respect of these advances, provision would have been created. And all of those provisions would have been charged to P&L during the year. That's what the company would have done. Yeah. So those amounts would have been charged to the P&L during the year. Yes or no? Yeah. Now, in relation to this, in relation to all of these provisions, etc., in relation to all of these basis of provisions, the bank has explained a detailed policy. Correct? So that is more about what the bank is required to do. Now what we will do is, now we'll just try to look at some of the audit requirements in relation to advances as to what is required to be done and how is that required to be done. One thing which we could understand by looking at the financial statements is that on the basis of what we have heard so far, advances no doubt happen to be the major item in the balance sheet. Correct? So that's the major item. Okay. And this being an asset to which the recoverability is attached. So therefore, there will always be a risk that this money is not collected. Yeah. So customers may not be paying this amount. Yeah. So that risk is also attached to this particular account head. Yes or no? So therefore, what we can say is Along with this advance, one area which should also get attached to this should be the provisioning of advances. Correct? Because if the auditor has to review the advances, if he has to verify this area, then it's important to understand the provisioning against them. Correct? Now, as regards advances, depending on the nature, of course, that we have looked at. Okay. For your purposes, just to keep it very, very simple, you can say advance is some money which the bank has given to a party, and the party is required to repay the interest on that money as well as the principal over a period of time which has been agreed between the two parties. Okay, now in relation to advances, if we move further, let's understand as to what are the things which are required to be looked into. First, it says there could be funded or non-funded advances, means the loans which are given. So what are these funded loans? These are the loans when there is an actual transfer of funds from the bank to the borrower. For example, term loan, cash credit, overdraft, demand loan, bill discounted, okay, all of these. Non-funded are the one which do not involve any money transfer. Okay, for example, bank guarantee. For example, letter of credit. So in this case, it's a kind of, you can say, loan which is given by a bank to a third party, but as such, money transfer doesn't take place. Why? Because that may become an obligation of the part of the entity if the money transfer takes place. As of now, as of now, actual money transfer has not taken place. Okay. And a very, very simple example to understand that will be bank guarantee, or you can say guarantee. If let's suppose a party has given a guarantee to another party, okay. Now, in relation to this guarantee, a liability may arise in the future. Yes or no? But today, in relation to this guarantee, can we say that some money has been given by this party to the other party? Tell me, can we say that? Will it be appropriate to say that? Quickly, what do you think? Do you think in relation to a bank guarantee, actual money flow would have taken place? Over to you. Tanu says no. Shreya says no. In fact, Dhanush has also given one example, and that is about promissory note. You can also say bill discounting. Yeah, but therein, I think you need to understand whether that is funded or non-funded. So now, are you clear on this funded and non-funded? In the context of entities, these terms are very, very common. Okay, funded or non-funded facilities. Yeah, but I just hope that you are also clear on this. See, once again, if you look at the nature, if you get into an understanding of all of these items, what are these? These are, sorry, why are these important? Because till time you do not understand that. How will you audit it? Yeah. Dhanush is saying, sir, non-funded का एक, okay, so एक बार समझाओ. Yeah, sure. Okay, so let me just give you one example. Okay. So let me just do one thing. Just give me a minute. Okay, I'll share one file and wherein I'll just try to help you understand this with the help of an example. Okay. Just give me a minute. Now, say for example, there's a bank and there's a party A Limited. So this party A Limited and bank, they have signed a contract. So what is the nature of the contract? Bank will give a loan of rupees 100 crore. Okay. And the nature of this loan is term loan. So in this case, what has happened? What has happened? There's actually a money flow. There's actually a money flow from the bank to A Limited. So therefore, funds will move from the account of bank to A Limited. Okay, so we can say funds will move. If this is the case, then what do you call it as? Funded facility. Okay, so this is a facility which the bank has given to A. And what do you call this facility as? Funded facility. Right? Now, as against this, let's suppose if you look at another arrangement, say the same bank is there, okay, and you have this other party. Now, let's suppose this other party requires a guarantee, okay, or a letter of credit. So what did they do? These two enter into a contract. Okay, now it's a separate arrangement. Okay, so the first one we discussed. Yeah, so that's the first type of arrangement. Now we are looking at second type. Now, in case of second arrangement, again, there's an agreement between two parties. What are those? Bank and B Limited. So they have executed an agreement which has been signed. Yeah, it's been signed. Now, as per this arrangement, bank has sanctioned, you can say, a limit for B Limited. Okay. Actually, there is no fund transfer. Okay, so this fund transfer, if you just check, so what do you find? There's no fund transfer. Now you may be thinking, but sir, why would somebody come to a bank or maybe to a party when the fund transfer is not there? Just to avail the limits. Okay, just to have that in place so that as and when it is required, they can avail it. Or for example, guarantee. If let's suppose bank has given a guarantee, so in that case, bank transfer funds to the account of other party. Yes or no? Yeah. So this type of arrangement, or you can say the second type, what do you call it as? Unfunded. In fact, this is called as non-funded. non-funded facility. Okay, again, it's a facility which is provided by a bank. It's non-funded. Clear on this? Yeah, Dhanush, clear on this? Any more questions? Yeah, Dhanush, you're clear? Great. Now, moving further. So we'll continue to obtain this understanding of advances. Why? Because when you will have this complete understanding, then the audit becomes easier. Or you can say only then the audit will be possible. Otherwise not. Now looking at the nature of the advances, I think this is also what we have already looked at in the financial statements. Okay, they may have separate categories. Term loans, cash credit, overdraft, demand loans. So these are all what? These are nothing but the categories. Then you have these bills discounted, okay, participation on risk sharing basis, interest bearing staff loans. These are again, you can say, the types of arrangement which the bank may have with the different parties. Okay, then in relation to all of these types of loans or advances, all means all of these. Yeah, so for all of these categories, there is a legal requirement to disclose them. One, into these three categories. I think these are the three categories that we also saw in the financial statements. Yes or no? Then there is a legal requirement to present them on the basis of securities. That is again something we have already looked at in the financial statements in the balance sheet of that entity. Correct? Then there is another requirement. And what is that? To break them on the basis of sectors. Yeah. Wherein you will also classify them as to whether those advances are given in India or outside India. But in relation to this categorization, okay, one thing which is very important for you to understand. So this format is prescribed by RBI. Why? Because this format of financial statements is fixed. Okay. So if let's suppose somebody says that instead of cash credit term, I'll want to use something else. Can this header be changed? Answer is no. Okay. So this header cannot be changed. Yeah. Why? Because this is something which is fixed, frozen. Okay. Understood? Clear on this? Yeah. So all of these categorizations which we have discussed, they are fixed. That's what the format requires. And that is what I think we have also looked at in this balance sheet. Can you see this? Yeah. So in this case, you'll find a difference in terms of the categorization. Correct? Yeah. So this becomes an important point. Now, why is that important? Can you tell me there's one audit procedure which is linked to this? Can you just help me understand what is going to be that audit procedure? It's a very simple one. If let's suppose you were the auditor, then I think this is one area you will also have to consider. Can you tell me? Can you think about it? As an auditor, in relation to this part that we just discussed, What's that audit procedure which you'll have to do? Or what audit procedure comes to your mind in relation to this format? Yes, quickly. Any thoughts? Lee, any thoughts? Over to you. Yes, anyone? As an auditor, what will you do? How will you look into it? Shreya says analytical procedures. No, of course, all of those procedures I'm not talking about. See, the procedure is very simple that if let's suppose you as an auditor understand that for advances, this particular format is given and every company which is into bank, okay, every bank will have to classify, will have to present their advances into these three categories: A, B, C. Okay. And within ABC, the nomenclatures which are used for the classification, they are also fixed. So will this become an audit procedure on your part to verify whether this format has been ensured or not? Yes or no? Yeah. So will that be an audit procedure or not? Very simple. Correct? Yeah. So as an auditor, therefore, this becomes an important procedure. Why? Because if this is not followed by the entity, then the format which is used by the company is not the one which is prescribed. So it may appear to you, but sir, it's a very basic one. Yes, of course, it's basic one. But it may have happened that the bank has made a mistake in terms of this classification as to what the format requires and what the bank may have done. Correct? Yeah. So that's why for an auditor, each and every procedure is important. Correct? Yes or no? Yeah. All right. This was about the classification of advances. Okay. We discussed as to what are these classifications. Now, let's try to understand all of these classifications. So we looked at all of these nomenclatures, all of these categories also. Now let's try to understand some of these classifications, okay, in further detail. So first, we discussed that the classification has to be done on the basis of sectors. Now sectors are also prescribed. Sectors could be the one which are for the if you go back, okay, which are for the public sector, which are for the priority sector, okay, which are again for the banks or others. Now in relation to every sector, there will be some peculiar point. In relation to every sector, the rate of interest, okay, if you have to go by the very basic aspect, the rate of interest which the bank would charge is not going to be similar. For example, if the advance is given to the priority sector, advance is given to the public sector. So both these sectors, you will find the rate will not be same. Yes or no? But how will you get to know about it as an auditor? Only when you get into the details of this. Correct? Yeah. Otherwise, you may not be able to appreciate some of these aspects. Yes or no? Yeah. So that's why it becomes important on the part of the auditor to get into these details. Yeah. Then Some of the examples of the priority sectors are agriculture, education, housing, means the companies which are into agriculture, entities which are into agricultural business, entities which are into education, entities which are into housing sector. Okay. So all of those businesses, if they obtain the loan, then the loans which are given to such businesses will fall under this priority sector. So that's how you are required to look into it. Okay. And for every sector, the arrangement which the bank will have, we have only talked about the interest rate, the arrangement which the bank will have, whether it comes to interest, whether it comes to the documentation, whether it comes to the eligibility checking, okay, different sort of terms and conditions which are attached to that. There's not going to be same. For every sector, it's going to be different. See, within the sector, of course, for a lot of companies, the bank will always follow a standardized format. Means a standardized arrangement will be there, generally. And the banks do not change that for different entities. But for different sectors, of course, banks will have different types of arrangements in place. Yeah, so that's how it's required to be always looked at. Okay. Next. Next will be the categorization on the basis of security. So banks may ask security or collateral while lending to assure that the borrower will return the money to the bank in the prescribed timelines. Yes or no? Yeah. Now, how does the security help the bank, or how is the security relevant to the bank? See, if the loan is given against the security as compared to a loan which is given without a security. Okay, so these are the two situations. If you look at, can you tell me how is this relevant to a bank? Will this be relevant to the bank or not? Over to you. Will this be relevant at all to the bank or not? Any thoughts? Tanu says relevant. So can you tell me how is this going to be relevant to the bank? Over to you quickly. Whether this will be relevant at all. Dhanush says, yes, sir, it will be relevant if there is security, there will be more safety. But what sort of safety is that? Can you please elaborate? Shreya says, yes, sir, because the provisioning will differ. But why would the provisioning differ? Can you tell me? Can you please elaborate on this? So if you say it will be different, provisioning will be different, okay, a lot of factors you say are going to be different. So what is going to be that different part? Over to you quickly. What is going to be different? Why is that going to be different? Yes, Julie says because in case there is a non-payment by the party which has taken the advance, which has taken the loan, then the bank can sell the security, if at all security has been taken, and recover its amount. Yes or no? Yeah. So you can say that's a sort of protection. So bank is secured. That's why the bank is considered to be secured. Or you can say that's why the loan is considered to be secured. For example, if let's suppose you go and take a home loan. Okay. Now the property which you would have bought, that will be held as a security to the bank. If let's suppose you are unable to repay the loan, say the loan amount is 2 crore and the security value is let's suppose 1 crore. So in such a case, what will happen? Bank can at least sell your property and recover the amount through that sale. In such a case, bank may not be able to recover the full amount, which is okay, but at least some part will be recovered. Yes or no? Some part will be recovered at least. As against that, if let's suppose there is no security available to the bank, okay, then what will happen? If the party defaults in repayment, if the party defaults in repayment, so will the bank be able to recover anything? Not really. Yes or no? Yeah. So that's where the bank is going to suffer significantly. Understood? Yeah. So that's where this becomes relevant. Yeah. And that's where this categorization is also important for the any stakeholder, correct, as regards their financial statements. And that's why it's also important for the auditor. Why? Because if let's suppose bank has given two types of loans, okay, first is secured, second is unsecured, and the auditor is trying to assess the recoverability of these two loans, then in case of loan which is secured, the amount of security which will be there, at least that part is assured. Yeah. So if the auditor will look at the provisioning requirement, if at all it's required to be in place in respect of these two loans. Yeah. So the provisioning requirement in case of the unsecured loan is always going to be higher. Correct? Yeah. So that's always going to be higher as compared to the one that you will have in case of secured loan. Yes or no? Yes or no? Yeah. Clear on this? Yeah. Okay. Now, banks ask security. So yeah, Shreya, and I'm coming to all of these points. Huh? Now, banks ask security or the collateral while lending to assure the borrower will return the money. Okay, so that's a kind of security. Now, what is the security or what is the primary security? The one that we just discussed. That's nothing but the primary security that we talked about, wherein the borrower will keep something with the bank. Okay, so the security could be in the form of any asset. Okay, generally the asset against which the loan is taken, that is always secure. Further, if you look at the businesses, when the business will go and take a loan, so what do? They will keep their inventory as a security with the bank. They will keep their receivables, so the debtors which are there, they will also keep them as security with the bank. Okay. Second is the collateral security. So you can say collateral is another security over and above the primary security. This again could be in any form, tangible or non-tangible, movable or immovable. Okay. In case of collateral securities, like we discussed, anything could be there. Inventory, debtors, okay, gold, bullion, property in the form of immovable property, personal guarantee. Okay. Very, very common. So all of these are what? These could be the collateral securities. Okay. And there are various other types which could be there. Yeah. So over and above the primary security, if additional security is also given, that's what you call as collateral security. So let's understand as to how does it work. Because you may have a question, but sir, how are these two different then? Yes or no? So you may have this question, sir, how are these two different? So let's try to understand this. Okay, so let's suppose you have this bank. So person has taken a loan against property. Okay, so that's the nature of the loan. So it's Mr. A who has taken this loan from the bank. Now in this case, there's this property. Huh? Now this property would have been mortgaged by default. Why? Because if the loan is given against this particular asset, so this property will become what? Primary security. Yeah. And let's suppose the loan amount is rupees 10 crore. Okay. Now, say while lending the loan or when this entire process was going on, the value of property was not sufficient to cover the amount of the loan. Okay. As per the parameters which the bank follows. So what happened? Mr. A gave one guarantee. Okay, let's suppose there's a friend of Mr. B, sorry, Mr. A. Yeah, so they are friends. So what A has done is A, in addition to this primary security, has also given personal guarantee. Okay, this guarantee is given by B. Okay. Now, this personal guarantee of Mr. B, what do you call it as? Collateral security. So let's suppose in future, now we have two persons, A and bank. Let's suppose in future, A is not able to repay the debt. So what will the bank do? Bank will go after the primary security. Means sell the property. Okay. Say total amount of the loan was 10 crore. Property is sold and the bank could recover 8 crore. Yeah, so 8 crore is recovered, right? So 8 crore is recovered. Still, okay, so 8 crore is recovered. Still, an amount of 2 crore is pending. So where will this be recovered from? This balance from the collateral security. Yeah, so this will be used to clear the balance part. Yeah, so that's how this arrangement really works. Clear on this? Any questions, any doubts so far? Quickly. Any questions, any doubts if you have? Over to you. Any questions, any doubts? No? Tanu is clear on this. Shreya is clear. Any questions? Any further questions? No? Sure? Okay, Tanu is asking, sir, what is the role of Mr. B in this? See, this collateral security was given by Mr. B only. Yeah, so for this shortage, who will pay this amount? B only. So that's the role. Yeah, clear? So if you go back to the arrangement, so that's the arrangement we discussed. Clear? So personal guarantee was given by whom? Personal guarantee was that of Mr. B. So what is the meaning of personal guarantee? That if A is unable to pay the loan amount, then B will pay. That's the meaning of personal guarantee. Okay? Clear? Everyone clear? Any questions, any doubts if you have? Okay, so Priyanshi is asking, but sir, in this case, what will be the benefit of Mr. B here? See, no benefit as such, or even if there is a benefit, so that is something these two parties will have to understand. Okay, so they will have some arrangement. Okay, or generally this is done when they are the related parties. For example, holding company will do this for subsidiary company. Okay, or maybe a group company will do for another group company. Okay, maybe the relatives will do that. Maybe let's suppose if you go take a loan, okay, your father has given a personal guarantee, your relative has given a personal guarantee. Yeah, so generally these type of arrangements you will see in case of related parties. Clear? Yeah. For unrelated parties, such type of arrangements will come at some commercial terms. So that's how it works. Okay? Clear? Clear on this? Any questions, any doubts so far? No? Sure? All right. So now, okay, Tanu is also clear. All right. So let's move further. Dhanush is asking, sir, bankers general lien means. See, lien means a mortgage. Okay. Lien means hypothecation. Yeah. So that's what we are going to cover anyways in greater detail now. Yeah. All right. So now, some of these securities that we just discussed, what was the advantage of that? So we discussed that this will provide a comfort to the bank in a way in terms of recovery of the amount if at all there is any default by the party. Correct. Now the question arises as to what are the ways through which these securities could be created. Means what are the modes of creation of these securities? Now, depending on the nature of the item concerned, creation of security may take the form of mortgage. Okay, so you may have different forms. So let's understand all of these forms one by one. Now, once again, if you understand, you'll get some more clarity in terms of what the management is supposed to do. And if you get this clarity as to what the management is supposed to do, only then you will be able to get on to the working of the auditor. Correct? Yeah. Okay. Now, mortgage. More of several kinds, but the most important are registered and equitable. Okay, registered mortgage can be affected by a registered instrument. It registers the property to mortgagee as a security. Equitable mortgage, on the other hand, is affected by mere delivery of title deeds, okay, with the intent to create security thereof. So you can say mortgage is a kind of mortgage. Okay, you can get it registered. Okay, when you get it registered, so you can say it's a kind of agreement which is executed between two parties, wherein you will specify. Equitable mortgages, wherein you just give the documents. Okay, There's no registry as such, but you give the documents to them. Yeah. Next, pledge. Now, what is this pledge and how does it really work? Pledge involves bailment or delivery of goods by the borrower to the lending bank with the intent of creating a charge thereon as security. Okay, so in this case, legal ownership of the goods remain with the pledger, while the lending banker gets defined interest in the goods. So once again, you can say it's a kind of arrangement. Okay, and in this arrangement, what will happen? In this arrangement, the interest which is attached in the goods, you can say a legal benefit of that is passed on to the bank. So that tomorrow, if let's suppose there's a problem, so bank can recover the money. Third, and a very common term which you understand is called as hypothecation. So now hypothecation is also a kind of equitable charge. Okay. In this case, when you have created a hypothecation, again, what will happen? The banker will get secured. Fourth, assignment. Now, in case of an assignment, what will happen? There will be a transfer of existing or future debt, right or property belonging to a person in favor of another person. Okay. Set off. Again, it's a kind of, you can say, transfer of security. Okay. Wherein you are giving the lender a right to recover money. Lien. Lien is a creation of legal charge with the consent of the owner. So in this case, again, legally the lender will get the right to recover the money. Now you may be thinking, but sir, all of them appear to be quite similar. So what is the technical difference between all of them? See, all of these are quite legal in terms of their uh, technicality which is attached to that. Okay, so that's why we should not be getting too deep into their understanding. As of now, you can just only understand the point that when it comes to the security, so these are different ways through which the security can be provided to the lender. In all of these cases, irrespective of the mode of security which is given, the lender will get the comfort in a way that the money, if tomorrow is not repaid by the borrower, then the lender can recover the money through the asset which is then made available to the borrower. Okay, yeah, clear? Now, moving further, what we will do is we'll just try to also look at some of these provisioning norms and the income recognition norms. But before that, I think we can take a break. Yeah. So any questions, any doubts that you have, please let me know. Then we'll take a break. Over to you. So this next part, I believe, is going to be a bit interesting, yeah, because these provisioning norms, income recognition norms, I find that to be quite interesting. Yes, over to you. Any questions, any doubts if you have? Quickly, any questions? No? All right. So let's take a break. Yeah. Altaf, let's take a break. All right. So let's move on to the next area. Okay, so this is about, you can say, the classification of assets. So if you look at the RBI norms, okay, so what I'll do is I'll just try to help you understand this conceptually. Because this is a very important area, and some of you may be familiar with this requirement. See, if you look at the advances, there are four categories in which these are categorized. First is standard, second is substandard, third is doubtful, fifth is loss assets. So RBI says, depending on the category into which these advances are classified. Now you may be thinking, but sir, we didn't see this classification in the balance sheet. So it's not really relevant for classification in the balance sheet. It's relevant for creation of provisions. See, the standard says, in terms of the norms that we have, that the money from the customer is recoverable. Okay, it's good. Standard means it's good. So as far as its repayment is concerned, it's completely okay. But if, let's suppose, you find some problems, customer has not been paying, there are some defaults, minor one, then you move this, you downgrade this from standard to substandard. If, let's suppose, problems increase, then you further downgrade that to doubtful. And the worst category will be the loss assets. So you can understand that it's the downgrading which is happening. So depending on the category, depending on the stage into which that particular advance is, okay, so this analysis needs to be done by the bank. And depending on the analysis which the bank will do, what will happen? What will happen? Their provisioning will have to be done. Even for this category, this first category, which is considered to be good, some provision is mandated by RBI. Yeah, but you may be thinking, but sir, why? When this is good, money is fully recoverable. See, these three stages are the ones that you have for non-performing assets. RBI says anything which has moved from standard to substandard or to doubtful or to further, which requires significant amount of provision at some point of time, that was standard only. Yeah, so that's why you should create that provision on standard also. Okay, so you can say a bit more conservative requirement is there, but that's good. Okay, considering the nature of business into which the banks are, it's considered to be good. Yeah. So now, as around this categorization, like we just discussed, we have standard assets. Okay, then we have substandard. Okay, Then we have this doubtful or loss. Substandard, doubtful or loss, they are all what? They are non-performing one. Means their performance has gone bad. Now, in relation to this non-performing, once again, there's a technical criteria which is given by RBI. So you can of course look at this criteria. You may have to mug up some of these requirements because they may be required. Okay, so you may have to memorize some of these points. Correct. Wherein the criteria is for a loan to be called as NPA, interest and or installment of principal remain overdue for a period of more than 90 days. Yeah, account remains out of order. If let's suppose that's an overdraft cash credit. So depending on the type instrument which is there. Now you may have a question, what is the meaning of out of order? That is also explained. It is out of order if outstanding balance remains continuously in excess of sanctioned limit. Outstanding balance in the principal operating account is less than sanctioned limit, but there are no credits continuously for 90 days. Okay, so different parameters are there. Which one needs to analyze? Yeah, so we can also look at one small example to discuss this. A Limited has been sanctioned a cash credit facility by ADB Bank for 50 lakhs, but as per the stock statement furnished for the last quarter, bank has calculated drawing par to be 42 lakhs. In this case, the account would be termed out of order if outstanding balance remains continuously in excess of 40 lakhs or 42 lakhs, or outstanding balance in the account is less than 42 lakhs, but there are no credits or any payments deposited into this account continuously for 90 days, or credits are there up to say 2 lakhs but are not enough to cover the interest debited. Okay, so all of these parameters you need to test. But this is more of an accounting requirement, I would say, or the compliance requirement, which is there on the part of the bank, which the bank needs to look into. And of course, if the bank has not done that, auditor needs to look into it, whether that's been done by the bank or not. Then, for the different categories of assets, provisioning requirement is there. For substandard, criteria is also defined. Yeah, so any advance will become substandard if that has remained NPA for a period of less than or equal to 12 months, wherein you create a provision of 15%. Okay, so it's like a rule which is required to be followed by every bank. Then you have got this criteria of doubtful assets. Okay, doubtful up to 1 year, doubtful up to 3 years, more than 1 year, doubtful more than 3 years. Now here again, if let's suppose the advance has become doubtful, but there is some security, so we'll do lesser provision. But if that's unsecured, then you'll do 100%. Now you may be thinking, but sir, why do we have these three percentages? Because we have got these three subcategories. So for each category, percentage is different depending on whether that is secured or not. Okay. Then the worst category, loss asset. Now because it's the worst category, so that's why entire amount should be provided. Yeah. So that's how it should go. Dhanush is saying, sir, what do you mean by prudential norms? Prudential norms, you can say, are the legal requirements. To put it in very, very simple term, legal requirements. Where does it come from? RBI. Okay. Priyanshi is saying, that's the query. Sir, are these percentages fixed? Yes. Yes, these are fixed. Bank will have to necessarily follow this. Okay. These are fixed. Bank will not have a choice. Let's suppose if the asset is substandard, so bank can't say, okay, I'll create 13%. No. At the same time, bank can't say, okay, I'll make 17%. No. This is the fixed percent. That's why I'm saying it's more of like a rule which is required to be followed. Okay. Yeah, it's more like a rule which needs to be followed. Clear? Yeah, so these are all the criteria. So it's all about the criterias. Now let's look at this small example. Mr. Raman has availed two loan facilities, a car loan as well as housing loan from XYZ Bank. So you can say Raman has taken two loans, car loan and home loan. He is regular in depositing the home loan but has not deposited last 4 EMI. EMI is the installment. And why did he not deposit last 4 installment of the car loan? Because the funds are not available with him. Okay, so there's paucity of funds. So he's struggling with the funds. So that's why he's not done this, obviously. Now the question arises. In this case, car loan, will it become an NPA? What do you think? Will it become an NPA for the bank? Tanu, I'll come to your query. Car loan, because there's a default. So should you call it as a non-performing asset? Yes or no? Tell me quickly. Over to you, everyone. I think it's a very simple one. Yes or no? Julie says, yes, sir. It's more than 90 days. So forget about this criteria of 90 days for the time being. If let's suppose this is a default, so will you call it as a non-performing? Principally, let's talk about it. Yes or no? Tanu says yes. Tanush, please try to understand what we are trying to discuss. Okay. Then I'll come to your queries. Yeah. So please try to look into this point. This is very, very important. Yeah. Tell me quickly, waiting for your response, Dhanush. So will you consider car loan to be non-performing or not? For the bank, party has not paid last 4 installments. So will that be a non-performing? Dhanush says yes. Now, as far as home loan is concerned, party is paying that. There's no default on the installment. Yes or no? So ideally, what should the bank do? Ideally, the bank should consider car loan as non-performing, but home loan as performing only. Yes or no? Home loan should be considered as standard asset. What do you think? Forget about the rules. Just think about it practically. Okay, principally. So home loan should be considered as a good loan. Yes or no? Yeah. Tanu says yes. Dhanush says yes. But there is again a requirement of RBI. What does it say? It says that it's not the facility which will become performing or non-performing. It's the borrower who will become performing or non-performing. Therefore, if a borrower has defaulted on any of the facilities, so what are the facilities? Car loan is a facility, home loan is a facility. So therefore, if Raman has defaulted on car loan, then the home loan to Raman should also be considered as non-performing. So it says asset classification would be borrower wise and not facility wise. All facilities, including investment in securities, would be termed as NPA. So in the given case, not only the car loan, but also the home loan would also be treated as NPA. Why? Because you will look at the person. If that person is not paying car loan today, he may start defaulting on home loan also. He may start defaulting on home loan also. Yeah. So that's the norm you are required to follow. Clear on this? Everyone clear? Yeah. Everyone clear? Okay. Now, let me just come back to your query. So Dhanush is asking, sir, what are these 15%, 25%, 40%, and for what they are given? I explained. Let me just explain this to you again. See, these percentages are for the provisioning. If let's suppose there's a loan in the doubtful category. So the bank has given a loan of rupees 10 crore to Raman. So now bank will have to check in which stage this loan is, whether that is standard, substandard, doubtful, doubtful up to 1 year, more than 1 year, less than 3 years, more than 3 years. So depending on the stage, provision is required to be created. Okay. So 25% is for what? Doubtful up to 1 year, provided that is secured. Doubtful up to 3 years, 40% provision. In case the loan is secured. But if let's suppose the loan is unsecured, then in both the cases it's 100%. Clear? Dhanush, clear on this? Dhanush, clear on this? Okay, great. So then I think I also missed out on one more query. Okay, Tanu asked me, sir, if these are not followed, so will there be penalty provisions? Yes, of course. See, these are the norms of RBI. Norms means you can say legal requirements. Bank is governed by RBI. Yes or no? Bank is governed by RBI. So anything which the RBI requires bank to do, bank will have to do that. If the bank will not do that, then it's a non-compliance of the regulation. Okay. So which may invite penalty. Okay. Or maybe some sort of fines, etc. Okay. Clear, Tanu? Now, in terms of some of these NPAs, or you can say this non-performance, this may also get regularized. Now, what is the meaning of regularize? Say Raman was not paying the car loan. Okay. Now, if let's suppose Raman starts paying the car loan, okay, he starts paying the installments. So the installments on which he has defaulted plus the future installments. So again, RBI has prescribed some norms that you watch it for next 6 months, you watch it for next 1 year. Okay. So if now the customer starts paying this on time, there are no further defaults. So up to a period of time, you need to watch this. So if that continues to be there, then you can move it from non-performing to performing. Okay. This is what is called as regularization. The regularization means it's improved. So non-performing means it got deteriorated. Yeah. So if it improves, yeah. So the terminology that is used for the same is regularized. Correct. Then similar to this, you may have government guaranteed advances. Okay, advances against consortium. So these are again different types of advances which would be there. Yeah. Now, depending on the criterias which the bank will have, okay, some of these norms which are mandated on the banks will have to follow, and therefore the borrowers will also have to look into these requirements. Yeah. Now, moving further, if let's suppose there's an erosion in the value of security, or if let's suppose there are frauds committed by the borrowers. Now, what is the meaning of erosion in the value of security? Erosion means, let's suppose you go take a home loan. So today the value of the property was rupees 1 crore, but maybe after 5 years the value of the property has gone down. Now it's 70 lakhs. Okay, so for the bank, it's a kind of disadvantageous position. Yes or no? Tell me, for a bank, will it be a disadvantage? Yes or no? Yeah. So therefore, it will have some impact to the bank. And this is what you call as erosion in the value of security. Okay. Erosion in the value of security can be reckoned as significant when the realizable value of the security is less than 50% of the value assessed by the bank or accepted by RBI at the time of last inspection. Okay. Now here again, there are some norms. There are some regulatory requirements for the classification of advances. See, all of these criterias are what? They are nothing but the legal requirements. And they are relevant in the context of categorization of advances. Now, categorization into what? What is standard? What is non-performing? Why? Because depending on whether the asset is standard or non-performing, its provisioning requirement will change. Its income recognition criteria will also change. Yeah. So again, depending on the different types that you have, all of these criteria need to be looked into. So now moving further, I'm not just picking up each and every line item, otherwise it may become too technical, which is not really the requirement for us. Now, as per the guidelines, if you look at the agricultural advances, so they are of two types. One, which is for long duration crops. Second, that is for short duration crops. Now, what is the meaning of this? Long duration crops would be the crops with crop season longer than 1 year. Okay. And the crops which are not long duration crops, that is what you call as short duration crops. Means that is less than 1 year, obviously. Yeah. Now, the NPA norms would also apply to the advances which are given for agricultural purposes. So, what are those NPA norms? A loan granted for short duration crops will be treated as NPA if installment of principal or interest thereon remains overdue for 2 crop seasons. And if it's a long duration crop, it will become NPA if the installment or principal thereon remains overdue for 1 crop season. Obviously, yeah, because in case of long duration crop, even 1 crop season is a good period. Yeah, so that's why you have different NPA criteria. So I'm just hoping that so far you are clear principally on what is an NPA and what is non-NPA and how are these two relevant. Quickly, please confirm. Are you clear on these 2 points? Yeah. Yeah. Tell me quickly. Over to you quickly. Are you clear on these 2 points? Yes or no? Yeah. Very good. Okay. Tanu says yes. What about others? Clear on this? Okay. So now let's look at this question. Ranjana Ceramic Private Limited. Sorry. Okay. So now Ranjana Ceramic Private Limited is sanctioned a cash credit facility. Okay, so they have been sanctioned this cash credit facility of rupees 100 lakhs from a branch of LMO Bank. Means LMO Bank has given a cash credit facility of 100 lakhs. Means 1 crore to Ranjana Ceramics. Besides, branch has also sanctioned one-time bank guarantee of rupees 10 lakhs on behalf of the company in favor of statutory authority. Means the company had to given some guarantee to the statutory authority. So the company took this guarantee from the bank and given to the statutory authority. Discuss what type of credit facilities have been sanctioned by the bank along with probable purpose for each of these credit facilities. Over to you. I think it's a very simple one. We have already discussed both of these points. Quickly, over to you. Tell me quickly. Over to you quickly. Dhanush, if you have some question, I'll come to your query. Yeah, okay. Can you please answer this one? So in this case, what type of credit facilities do you see if you look at these two? And what is going to be the purpose? Tanu says collateral securities. See, collateral security is a security. The question is asking you about types of credit facilities. Okay, so please try to understand the requirement of the question. If let's suppose you have this question in the exam, okay, so you need to understand as to what is it you are required to answer. Yes or no? Yeah. So please think about it. We have already discussed this. What about others? Quickly. So if you look at these two facilities, how do you assess them? Over to you quickly. You are just required to comment on the types of facilities these are. Yes, quickly, huh? What types of facilities do you find here? Over to you. Tell me quickly. So should we go to the solution? Okay, great. I can see one more response coming up. Okay, very good. Kanu is saying it's something in the nature of set off. I think you are talking about the mode of security. Yeah. All right. So no worries. Let's try to go back to the discussion that we had on the types of facilities. There were two types of facilities we discussed, funded and non-funded. Remember? Can you tell me the one that is funded? What is funded loan or a funded facility? Tell me quickly. And what is non-funded? I think we also looked at the examples for both of them. Tanu says non-funded. Once again, what is the meaning of non-funded? Please elaborate. If you want to speak up, you can speak up. But please try to answer this properly, the way you will answer this in the exam. So what is your understanding of funded? What is your understanding of non-funded? And can you now relate to this? Tanu says non-funded means wherein the money flow is not there. Julie says term loan is funded, letter of credit is non-funded. Now, in the given example, if you look at the cash credit facility, so will this be a funded one? Of course, because there is a money flow, correct? And generally, if you look at the cash credit facility, why is that given? To meet the working capital requirements. Now you may be thinking, but sir, how do we get to know about it? See, it's a general understanding about this type of loan. Okay, so that's how you need to just look into it. Cash credit is generally given for the working capital requirement. So that's the basic nature, or you can say that's the basic purpose which is attached to such type of loan. Okay, then bank guarantee. If let's suppose bank has issued a guarantee to the authority on behalf of the company, so do you see any money flow taking place? Tell me, do you see any flow of money taking place in such a case? Over to you quickly. Do you see any money flow? Is there any transfer of funds in case of a guarantee? Answer is no. Tanu also says no. Yeah. So therefore, what will you call this facility as? Non-funded facility. Yes or no? You'll call it as non-funded facility. And why is a guarantee given? Can you just think about it on your own and help me with the purpose now? So why is a guarantee given? Let me just see who can just try this. Okay, so whether your answer is wrong or right doesn't matter. Please try this. What is the purpose for which a guarantee is given? Yes, quickly. What could be the purpose of a guarantee? Dhanush, I'll come to your query. So can you tell me what is the purpose of a guarantee? Dhanu says it's given to the statutory authority. That's correct. But what's the purpose? See, the purpose of a guarantee will be to fulfill some statutory obligations. Yeah. So maybe, for example, say an authority requires the company to give some guarantee. Okay, so that tomorrow, if there is any default on the part of the company, so the authority can encash that much money from the bank. So that's why bank has given this guarantee. So in future, if let's suppose there's a default on the part of the company, what will happen? Authority will claim that money from the bank and bank will claim that money from the company. But today there is no money transfer. Yes or no? Yeah. Clear? Clear on this? Yeah. Okay, now I can see a couple of queries coming up. Dhanush is asking, sir, in the given case, bank is giving 100 lakhs. That is 1 crore. So how it can be said that the sanctioned amount is for working capital requirement? So Dhanush, I couldn't understand this query. Can you please elaborate? So what is the question you are just trying to understand? If you want to speak up, you can just speak up. Yes, quickly, over to you. What is the question here? So depending on the amount, I think you have raised this query. So what is it that is creating a sort of confusion over here? Quickly, over to you. Can you please elaborate? If you want to speak up, you can speak. Yes, Dhanush, please elaborate on this. Quickly. See, as far as the amount is concerned, it should not have any impact. Yeah, he's saying I'll ask at the end. No worries. So maybe towards the end of the session, you can just elaborate. Huh? Okay. Now let's move further. Okay. So now next example. During the course of audit of branch of a nationalized bank. Okay, so it's a branch audit. You find that, so you are the auditor, you find that system has generated a report marking 10 term loan accounts as SMA. Discuss the meaning of SMA accounts and significance of such a classification. Now, what is this SMA? Let me just take you back to SMA because this abbreviation may bother you. So this is the SMA we discussed. SMA, you can say again, is a category of standard loans. Remember, standard, substandard, doubtful, loss. So against this standard, you have this standard regular or special mention account. So these are the special mention accounts. So now in this relation, you have this query. Okay, so what's the query? That you are required to explain as to what accounts these are and what is the significance of this classification. So let's try to understand this. SMA accounts, they are what? They exhibit signs of incipient stress resulting in the borrower defaulting in timely servicing of debt obligations, though the account has not yet been classified as NPA. Okay, so within the standard category, you can say if some sort of deterioration has started happening, but it's not deteriorated, it has not moved to NPA, it's moving towards that stage. That is what you call as special mention account. So if let's suppose auditor has come across 10 term loan accounts which have been classified as SMA, it means there are overdues in those accounts for a period of 0 to 90 days. Why? Because if you cross 90 days, then it becomes NPA. Yes or no? Since the period of 90 days has been exceeded on that date, it will become NPA. Such a classification is significant as early recognition of such accounts enable the bank to initiate timely remedial actions. So let's try to understand this. So in this case, if you remember, objective of RBI is to ensure that the provision is not missed out. Okay, and standard is what category? A good asset. Correct? Now, if let's suppose okay, just give me a minute. Just give me a minute. So I'll just open one working file wherein we can just try to discuss this. Okay. So now, say for example, we have this asset and we have this asset say within this range. Now, let's suppose a loan is given today. Okay, so say it's day 0. If this loan becomes overdue for more than 90 days, what will you call it as then? NPA? It will become NPA? Yes or no? But for this loan to cross this threshold of 90 days, it will have to also move towards this. Yes or no? So this range wherein let's suppose this is overdue for 80 days. It is overdue for 60 days. That is also a stage wherein some sort of deterioration is taking place. Some sort of deterioration you can see over there. Yes or no? Yeah. So can we say that stage is good? Answer is no. Answer is no. Okay. So this stage is important to be monitored. This is important to be monitored. Why? Because if you can identify the problem at an early stage, then you can prevent such loan to move into this range. Why? Because if the loans becomes bad and then you start monitoring that, then you start performing some procedures. It's better to do that at an early stage. Okay. Yeah. So that's why something which is in this range is what you call as special mention accounts. And what's the objective of the bank? Prevention. Prevention. Okay. Prevention so that it doesn't become NPA. Clear on this? Everyone? Everyone clear on this? Any questions, any doubts if you have? Over to you quickly. Any questions? Okay, so Tanu is clear. All right. So now what I'll do is, okay, so I've got one concept around drawing part. So just not pick up this drawing part. This we can do later. So now I'll just move on to the audit requirements. So far, all of these requirements that we have discussed, okay, of course, these are also going to be the audit requirements. Why? Because the auditor will have to look into it. But this is not really audit. This was about what? This was about understanding as to how the advances are required to be classified. What are the stages? What are the norms which are attached to that? Okay. Why? Because accordingly the accounting will have to be done, accordingly the provisions will have to be done, accordingly the classification, presentation in the financial statements will have to be done. Now, as an auditor, what will you do? First point is very, very simple. As an auditor, we can say that we need to ensure that all of these things about advances that we have discussed so far are taken care of. Okay, so in a one liner, we can say this, that what is the role of the auditor? To ensure all of these things are in line with the requirements. So now for doing that, what are going to be the audit procedures? What all things you will look into? Yeah, so let's try to spend some time on this. And please remember, audit of advances in a bank is the most crucial element, because this entire focus on the audit of advances should take up the significant chunk in terms of the effort on the part of the auditor. Why? Because this is the most important element. Yeah. Remember our discussion on the risk assessment. So when it comes to the planning, what do? You identify which all areas will have significant risk and which all areas will have not significant risk. So advances is one area which will always be a significant risk area. And because it's a major chunk, so that's why the focus has to be quite significant on the part of the auditor. Why? Because the risk involved on this area is quite significant. If you cover this area, then in a way you are covering a significant chunk of the financial statements. Understood? Yeah. So that's why when it comes to this chapter also, because many a times you may be thinking that, sir, in this chapter, what is so important? So I would say advances should be the most important element of this chapter. Okay. Yeah. Practically also, theoretically also. So if let's suppose tomorrow you go audit any bank, you will find that this is where the focus of the auditor is going to be. And there again, that's what I believe theoretically it should be like this only. Yeah, so in this chapter, focus of anybody who is going to test as regards any of these aspects should always be on the advances, being the key element in the financial statements. Okay, now In carrying out audit of advances, auditor is primarily concerned with obtaining evidence about what? First, amount included in the balance sheet. Okay, whether that amount is complete or not. Advances represent amount due to the bank. Okay, means their classification is correct. Amounts due to the bank are appropriately supported by long documents. Means which assertion? Can you please also name the assertion which is attached to some of these points? So if you talk about point number C, can you tell me which assertion will get tested if you look into the loan documents, if you look into the supporting documents in relation to the advances? Quickly, which assertion? Remember the assertions when the audit is performed, assertions are required to be looked at. So which assertion will be covered? Over to you quickly. This you would have covered in detail. Remember, Tanu is saying securities. I'm talking about assertion. I'm not talking about the document. Priyanshi says existence. That's true. Existence could be one. Which one else? So of course, existence, you may check through this. But what else? Okay, which one will be the most appropriate one? Tell me. Rights and obligations. If let's suppose bank has given a loan to a party, so bank has a right to recover that money. Bank has a right towards that asset. So how do you establish that? Through the agreement only? Yeah. So which assertion will get covered through this? Of course, rights and obligations. Accuracy will also be covered. No doubt. Yeah. So you may say that. But the most relevant one attached to that should be this one. Then there are no unrecorded advances. So which assertion will get linked to this? If you test this, which assertion are you trying to look at? Can you tell me? Over to you. So with this point, there are no unrecorded advances. So can you please name the assertion quickly? Dhanush is saying reality. So I think you are bringing in your own assertions. Maybe you have forgotten that point completely. If you go back to the discussion on the chapter audit of various items of the financial statements. Yeah, so a lot of assertions were discussed related to balance sheet, related to P&L. So when you are looking at and when you are trying to ensure as an auditor that no advance is unrecorded. So what are you trying to ensure? Completeness. Yes or no? So we are just trying to ensure completeness. Yeah, remember? So can somebody name the assertions? Over to you. Can somebody name the assertions which are there in case of balance sheet? Quickly. So do you remember the assertions? Let me just see who can answer this. Though it's not really relevant to this chapter, but it's important. Over to you quickly. Let me just see who remembers the assertions. Tell me quickly. So when it comes to the audit of balance sheet items, what are the assertions auditor is required to look into? Tell me, what are the assertions? Yes, tell me quickly. Okay, great. Dhanush is saying, sir, existence. Okay, very good. Almaz has also answered this. Priyanshi has also answered this. Then why you are not able to link these assertions? Okay, Dhanush says existence, completeness, valuation, rights and obligations, presentation and disclosure. Very good. I think same is the response from Almaz. Same is the response from Priyanshi. Now, please remember that these assertions are very, very relevant. Okay. How are these relevant? in the context of the procedure that we just discussed. So when it comes to any audit procedure, so what would it mean? It would mean you are trying to cover some assertion. Yeah. So if you understand the assertion, you will be able to design the audit procedure very quickly. But if you don't understand the assertion, or if you forget some of these assertions, then some of the audit procedures you may not be able to design. Yeah. So that's why it's important for you. Okay. Now, next aspect which the auditor may try to look into is stated basis of valuation is appropriate. So that means he's talking about accuracy or the valuation. Correct. Advances are disclosed, classified, described in accordance with recognized accounting policies. So can you tell me which assertion you would like to link to this? Quickly, let me just see who can answer this. Quickly, it's a very simple one. Which assertion you think is going to get linked to this? This point number F. Very good. Almaz says presentation and disclosure. Same is the response from Tanu and Priyanshi. Okay, Julie has the same point. Very good. Yeah. Then appropriate provisions towards advances have been made as per the norms of RBI, accounting standards, or any accounting principles. So what does it mean? Valuation, accuracy, correct? And of course, completeness of provisions. Completeness of not the advances, but the completeness of provisions. Yes or no? Okay, now auditor can obtain these evidences by studying, by understanding, by evaluating the internal controls. Again, a very important area. Okay, so anytime when you start the audit, when you get onto the field work, so what do? You'll just try to understand the controls which are attached to the particular area, particular process. And we have discussed this quite a lot, that when it comes to the banks, because their nature of operations are such, because their size is such, that you can't test each and every item, or even if the samples you select, okay, you may not be able to draw comfort. So that's why the first and the foremost thing that you need to focus upon will be what? To check whether the systems controls are in place or not. Yes or no? Yeah. So in relation to various areas, examining the validity of recorded amounts, loan documentation, reviewing the operation of accounts, examining the existence, enforceability, valuation of security, compliances with RBI norms, a very important area. Okay, carrying out appropriate analytical procedures. Correct. Now, if let's suppose control testing is done, controls etc. have been looked into. Now, what is the next thing auditor needs to do? Next thing will be to pick up the samples. Now, when the samples are going to be picked up, so as we discussed, each category will become a population. From each category, some samples will have to be selected. And similarly, these categories should also become a population. So auditor should ensure that the samples selected, okay, they are representative of each type of population. Or in other words, every type of population should be covered within the samples which have been selected. Yeah. So that's going to be the most important aspect. Otherwise, what will happen? Otherwise, the sample selection is erroneous. And if the sample selection is erroneous, then there is no point checking that. Yes or no? Because if the sample is wrong, then what do you do while checking that? Yeah, because your basis is wrong. Okay. Correct? So now, generally, when it comes to the sample selection, of course, the sample selection has to be done on a random basis in an unbiased manner, but the large amounts are the one on which the auditor will always focus upon. Okay, so he would always want that the large balances get covered. Okay, and generally a threshold is also picked up by the threshold in terms of what all things are there in a particular category. Yeah, auditor will look into the efficiency of the internal controls as we just discussed, and those could be in relation to various aspects of advances. Yeah, so entire process of giving an advance, entire process of monitoring of those advances, repayment of those advances, documentation around those advances, the sanctions authority metrics which will be there in relation to those advances. First of all, auditor will look into that. Auditor will try to understand what all risks are there in relation to each activity, what all controls bank has established in relation to those activities, and then the auditor will get into the walkthrough as well as the control testing, which will include all of these aspects. Okay, similar to what you will do in case of any other company in any other process. So the same thing you will do as an auditor in case of advances also. Yeah, but herein, please remember the risk is quite high. One, because of the volume. Second, because of the norms. Third, because of the categorization, like we just discussed, there are different categories. So you need to ensure that all of these categories, plus for different categories, there are different criteria. So as an auditor, it is of utmost importance when it comes to a bank to be aware of the relevant rules, aware of the laws and regulations. Because if you are not clear on that, then definitely, okay, it is going to be a big challenge for the audit of that particular bank, or maybe for the audit of that particular area. Yeah. So you can say that is a very important area on the part of the auditor. Yeah. So let's try to understand some of those areas. Bank should make an advance only after satisfying itself as to the credit worthiness of the borrower, after obtaining sanction from the appropriate authorities, all necessary documents, agreement, okay, whether you call it as promissory note, should be executed by the parties. So generally, banks are very particular. I'm not sure if you have dealt with the bank, you would have seen that they are very particular about the documentation. If let's suppose you go and want to get your check cleared, if let's suppose you withdraw some cash through a check, okay, you must be knowing about it as to how particular they are. Why? Because these are very important systems in their in their processes. Okay. Next, compliance with the terms of sanction and use of funds. Sufficient margin should be kept. Okay, so when the securities are given, it should not happen that the value of security is 50 lakhs and the loan is given for 5 crore. Yeah, because idea is to make sure that the loan amount is covered. So that's why bank will have a generally limit assigned to the loan and the security. It may be 50%, 60%, 70%, depends on the bank to bank, category to category. Yeah. But all of those categories, all of those norms are required to be looked at. If the securities taken are in the nature of shares, debentures, ownership of the same should be transferred in the name of the bank, obviously, because idea is to make sure that the loan is secured. Okay. Now, the mode of providing that security could be different. Yeah. Then, in case of goods in the possession of the bank, consent of the packages should be test checked. Yeah, goods means inventory. If let's suppose that is mortgaged. Drawing power register. So this is again a limit, okay, which is required to be looked into. So in the next session, we'll talk about this drawing power also. Okay, on the basis of this drawing power, bank will sanction the loan, or you can say bank will sanction the amount of the loan. So this is again one of the criterias which is required to be looked into. Okay, then all the accounts which exceed the sanctioned limit drawing power, whether they are regular or not. Why? Because this will have an impact as to whether the loan will be standard or NPA. Correct? Operation of each advance should be reviewed at least once in a year. In fact, for the banks, it's a regular activity. For an auditor, as and when the audit will be performed, this will have to be done. Why? Because this is very, very critical. Why? Because this will have an impact on the provisioning. Yes or no? Yeah. So for all of these categories, like you, for example, in the financial statements, you'll see different categorization are there, and for different categorization, different norms will be set up in place. Okay. And for an auditor, it will be important, first of all, to understand the norms which are attached to this. Can you see there are so many line items? Yeah. So just imagine the volume which will be attached to that. Yeah. So that's why generally a big chunk in terms of the effort is spent by the audit team, and it also involves the involvement of the senior team members. So that's how it practically works. Okay. So I think this is what we can just maybe look at, and this is where we can just conclude our discussion for today. So we are not yet done on this, and we are not yet done on the advances also. In the next session, we plan to continue with this. Okay. And it's very important that because we are planning to continue on this, so you revise this. Yeah. So that's very, very important. So now what we can do is any questions, any doubts that you may have, we can move on to that part. Okay. And then we'll close our discussion. Yes. Any questions if you have? Over to you. Quickly, any questions? No questions? Sure. Right. So if you do not have any questions, then we can just close this discussion here. Yeah. Thanks everyone once again for your time and for this wonderful participation today again.
Okay, thank you, Achal sir, and thank you, students, for your participation. Today, we have continued chapter number 10, Audit of Banks. In the next class, we will be completing this chapter. So now you're almost to 90% of the course is being completed. So revise as much as questions you can. Now you have plenty of questions. You can check study material. Along with the study material, you have model test paper booklet in which there are lots of questions for your practice. So do that practice of all the chapters, not just of audit of bank, from chapter 1 to 10, practice all the questions of model test paper and try to practice by writing. Okay, this will help you writing the answers in the examinations. And along with the model test paper, you have previous year RTP's revision test papers. You can find question there also. Okay, and along with the RTP, solve previous year question papers like in the recent in the May 25 attempt question paper, you will find one question of audit of banks of computation of drawing power. So this is the chapter in which you will find some practical questions also. So solve that, okay, for your practice. And if you face any difficulty in and solving any question, you can ask in the class also. And if you cannot ask in the class, you can ask us through BUS Knowledge Portal app. Okay. And if you have any questions, students, you can ask now because ask as much as question in the class also because now only your 4 lectures are left of this session, of this batch. Okay, so ask all of your questions. And after post completion of batch, you can ask us through the app also. Okay, and if you have any doubt, you can.
I can see one query coming up from Tanu. Tanu is asking evaluation of internal controls over advances is important in the point of view of the auditor. Yes, of course. See, whether it's about advances, about banks, in any area, this is extremely important. Yeah, because this will set up the base. or you can say in terms of the planning, in terms of the extent of testing, this will set up the base. Any more questions if you have? No? I think they are done.
They're done. Okay, so see you students in the next class, which is on Friday. Thank you, everyone.
Thanks. Thanks, everyone.